Hello, welcome back to the Entrepreneur Hour. My name is Miguel Sanchez, and I help entrepreneurs and investors profit more through innovation. Today, my special guest is Vincent. I don't know how to say your last name, but
Fresco. You know,
Vincent from TruCrowd, the CEO of TruCrowd. If you don't know what TruCrowd is, TruCrowd, actually, why don't you explain what TruCrowd is?
Yes, thank you, Miguel, and hello, everyone. So TruCrowd is a equity crowdfunding portal. We are SEC regulated, FINRA member, and what we do, we help issuers, which is companies, mostly small companies, to raise money from the public while remaining a private company. And the amount a company can raise as of now is up to $1,070,000. The limit will be soon $5 million, but for now is $1 million, which for many companies is more than enough to start.
And that's per year, right?
You can per year, exactly, per year, like 12 months rolling. So let's say it's not calendar year, it's 12 months rolling. You can raise $1 million. Every year.
And what he was about to say, he didn't say it, but they're about to change the law. Oh, he did say it. They're going to change the law to make it $5 million a year. So
yes, yeah.
So this is going to change the landscape of early stage investment, right? So that's why we're even connected. I'm talking to investors. I have an investor partner, and he told me, "Look, you need to talk to Vincent because I've been really pushing this platform thing, this equity crowdfunding thing." So tell the people watching about your background. How'd you get into entrepreneurship in general? And then how'd you get into equity crowdfunding?
Okay. So I'm an immigrant. You can guess from my accent. So I came here about 20 years ago. Okay. And I was lucky enough, some of college friends from college, they invited me on an H-1 visa. And they started a telecom company. Okay. And because somehow I liked accounting, they make me their CFO. Okay. Okay. And yeah, all was good. In about 2006, 7, 8, we had about 300,000 customers.
Oh, wow.
And we needed money. Yep, we needed money with this telecom company to go into mobile cell phones. And I said, okay, I'm smart. Let's take from one invest for each client, like $50. And then we have plenty of money to do what we want to do. I called the lawyer, I called the CPA, and they said, Vincent, that's very smart, but you might go to jail. Exactly. So why? I mean, they give us the money. So no, it's illegal. So, oh, okay. So that was kind of shocking for me at that point that you cannot do that, right? Because, people would be okay to give the money, but was no legal framework.
Just so if you don't understand why you can't do it, it's because you can't take investment from unaccredited investors. At that time, if you're investing a certain amount of money, or any money, I think at that time, you have to be worth a certain amount of money and have a certain amount of assets because
yes, you have to be rich.
You have to be rich. You have to be a 1%er. Basically, the government says if you're not sophisticated enough to understand investment, you can't invest. So that was their call. Yeah. But I always said, yeah, but what about lotto? How come you let people play unlimited lotto, but you don't let people invest in ideas, right? So
or Las Vegas.
Or Las Vegas, exactly. So now Obama passed this law called the Jobs Act. This happened in around 2012, right? Where he fixed this problem, right? So now people can invest up to $100,000 a year in equity crowdfunding platforms, right? So, so you basically, you were wanting that. It didn't happen, but when you saw it coming in 2012, it made you jump into it. Is that what happened?
Exactly. Then I was reading and I said, oh my God, this is best thing. And in the same time, I was solicited to make investments, right? And I had decent salaries to put me in that category of accredited. But the limit was 50,000 per deal, even as an accredited. 20,000. And I said, I mean, the deals that I talked to, right? And I said, man, I like the deal, but I would not dare. I was not that rich, right? I would put 1,000, I would put 2,000 in the deal, but not 25,000 in one deal. So, right? So then when I read about,
because you put 25,000, so I just want to make sure people understand. You put $25,000 into one deal, that is very risky, right? So a lot of people
exactly
put that 25,000 into multiple projects. So if you can afford to put 25,000 into one project, you're probably putting it into 10 different projects. So you have a lot more money to potentially lose, right?
Exactly.
Putting
so you have diversification.
Exactly.
Yeah, you diversify your portfolio. So even if some of the deals will not go anywhere, the expectation is that some of them will do really good. Basically, this is the VC game, right? Yeah. Same thing, but at a lot smaller level.
Yeah. Definitely.
So
you saw it coming. And I remember they put me in a meeting when it was about to come out. They asked me to go to a meeting in the Bronx to understand what was going to happen and get my feedback on it. And I remember thinking, oh my God, this is going to be huge, but have no idea how I'll get involved. I remember there was a whole process to try to get one of these, I guess, applications or whatever.
License, yep.
License. So talk to me about, okay, you saw the opportunity. What did it take for you to get into the game?
Well, 2012, I was reading about the Jobs Act. And I said, okay, that's it. That fixed my both issues that I had. And I saw, like lots of people, the opportunity, right? Because there is a real need for that. So then on 2013, I incorporated TruCrowd and I started working on it. Well, tough luck, because the legislation became effective in 3 years later. Okay. In 2016, in May.
Whoa, I didn't know that. Yes. That. So the law changed, but there was no platforms till 2000.
Well, it was the act that was passed in 2012, and Congress told the SEC, you have till January 1, 2013 to do it. But of course, it was a big change in the whole security law. Huge. Yeah, so it took them 3 years. It took the SEC, but they got it right. Why I know that? Because I have a lawyer friend, securities lawyer, and he was out for a while, some medical reason, right? And then when he came back and I talked to him about Jobs Act, he said, no, Vincent, you cannot do that. No, Vincent, no, it's impossible. So everything he knew, and because he was not updated during that time, they changed. And it's hard, right?
That's amazing.
To make so many changes into a big system.
And SEC is like, people go to jail for all kind of stuff, So this is like a whole new, like, possibility for the public, right? So
yes,
you waited the 4 years, 2016. Yes. How did you end up getting a license? Because I know they only gave like 30, right, or something like that.
Yes. In fact, what is funny, I mean, we got the license, so the regulation crowdfunding was official live May 16, 2016. We also been invited to Washington, D.C. to Capitol Hill building, was some celebration of the thing. And we've been invited to there, and we got the license, the approval from FINRA in that day. I was kind of, okay.
Whoa, that's crazy.
That's cute. That's yeah.
So that day you found out you were one of the few licenses awarded.
We kind of knew. Because what's the process, right? Lots of back and forth, interview, send us that, submit documentation. We kind of knew, but somehow was kind of good timing that we got the license in the same day when the regulation crowdfunding went live.
So, okay, talk to me about, so you're a startup. At that point, you're an equity crowdfunding startup. What goes through your mind about how to stand out in this world that I think it was 30, right? Was it 30 or 50?
Yes. 30, yeah.
30. So
yes.
you know you have to stand out between 30 different equity crowdfunding platforms. What do you do in that situation?
Well, again, being an entrepreneur and being in small businesses before, speed is important. Speed and simplicity. If you go slow and complicate stuff, kills everything, right? Yeah. If you add time to any project, takes forever, people lose interest, the opportunities get lost.
So you gotta be as simple as possible to get it right? You can't put too many features in the way. Yeah.
Exactly. So our let's say goal was to be fast and simple, and we still live by that let's say mission that we have. And I think we do okay on that chapter. The fastest deal that we put live.
Do you mean fast when, let's say, I come to you with an idea and I want to get on your platform? You're saying
yes,
you have one of the fastest paths to do that. So
yes.
Can you explain what that is? The path, because I want entrepreneurs watching the Entrepreneur Hour to understand, one, the opportunity, and then understand what it takes to get there,
Sounds complicated, okay? Sounds complicated because you deal with securities. You deal with the thing that is highly regulated by the SEC itself, right? And the states, but because this regulation crowdfunding was made in such a way, the states, because each state, they have their own securities division, but they made it in such a way that they told the states, don't look at it. It's not your jurisdiction. It's just federal level.
Oh, wow.
Right?
That's really important.
Yeah.
That could have tied everything up.
Exactly. Yeah. Because imagine if you have, in general, other exemptions, if you have one investor in 5 states, basically you have to talk to that state regulation security division to tell them and being right. So that's pretty neat. Yes.
So, okay, that makes sense.
So our process, sounds complicated, but what we do, we take the issuer and help them with every single step. You have to have a corporation, a company. Okay, that's must. You have to have a business plan.
Does it have to be a specific type of corporation? LLC,
no.
Corp, S Corp?
No, it just depends what your final goals are. Okay, if you want to raise one and then grow and then keep the investors, an LLC, it's okay in general. But if you want to really grow and raise more money and then do another regulation and raise even more money, an LLC might be limited. Exactly. And then you're right.
So the reason for that is LLC has a limit of the number of investors, right? That it can be on an LLC versus C Corp.
That's one. And the second is the security you'll be selling. When you on a LLC, you sell units of membership interest.
Yes.
Complicated stuff. Who understands that?
No,
in the corporation, it's harder, right? Sure. And you have to explain. And as a company that is raising money, if you have to explain, you lose. That's it.
Yeah, exactly.
Very simple.
And it's already super complicated. So the more you complicate it, what I always heard, especially for venture capital, is you need to be a C Corp in Delaware. That gets you the best opportunity to raise money. So that's why I was really interested if there was any.
So it's kind of the same. There are reasons for that. So you have to be a C corporation first. You have to be you can be an LLC and to be treated as a C corporation. You can, right? So you can do that, but you have to, because you don't want your investors to get a K1. If it is an S corporation or a partnership, they'll get a K1, and that will complicate everything.
So just if you don't understand what he's saying is a K1 is like a tax hit, right? You're gonna get something on your taxes that could affect you tax-wise, right? So that's where LLC can really screw you up. Another thing I know about S Corp, because I have an S Corp, is corporations can't invest in an S corp. So if there's a fund, they can't invest in your company, right? It needs to be.
Yes, that's correct.
So, yeah.
Yes. So there are many details, and we kind of try to copy the VC game again at a smaller scale.
Sure.
So in general, right, you have VCs invest big amounts. Anyone can be a tiny micro VC, and let's say they have 2,000 per year. They want to invest. Well, they invest in 10 deals, 200 in each.
Yep.
And all the other rules. Yeah. So all the other rules are kind of are the same.
Okay.
Where to have the corporation, but again, it depends what you want to do, and we will talk to each issuer individually. When we ask, what is your final goal? You want to grow really big, to go public? Then we say, if you don't have it done, go Delaware, C corporation. If you already have it done, it's okay. Let's not waste money. Do it with what we have.
You can change later.
Exactly.
You can change later. So yeah, if you're already started, don't think about that. The next thing I want to, because I know we've had conversations, but I want the public to understand. Okay, you're incorporated. What else do you need to have? I know that there's fees. There's different things. Yeah.
Yes. So you have to have reviewed financials. Reviewed financials.
But you have to have specifically created a specific way, right? It can't be you making your own books.
Yes, no, you have to have an independent accountant to do it for you. Yeah. And not any CPA is doing that, just CPAs that provide assurance services. Again, sounds complicated because it's new. We did it so many times, it's very simple, and we help each issuer with everything they need on that chapter, everything. Yeah. So again, review the financial. They have to have the books and send to a CPA. And again, even if it is a startup, still costs around $1,000 and a half.
For the accounting alone, right?
For the accounting alone.
Okay.
Again, if the...
No, I got to finish.
So if the issuer wants to raise more than $107,000, the SEC made the rule that if you want to raise less than 107, you don't need that. You just certified. Okay. Again, to make it simpler. So
that's really
exactly.
One thing I was thinking though is, does that mean you have to be earning revenue already, or
no? Even with zero.
Okay.
Even with zero, it's important to have, because zero in accounting is not the worst. You can have minus 5 million.
Yeah, exactly.
Right? Sure. So zero, whatever, even if you have all the financials zero everywhere, $1,000 in a bank account, it's good. It's okay.
Yeah.
Because, having zero liability is a lot better than have $4 million debt, right? Yeah. So the financial position is better with zero than 4 million in liabilities.
No, makes sense. So, okay, so now we got accounting is set up. You're incorporated. You got your accountant, which you have to have it separate, so it's going to cost you about $1,500. What else?
Then we charge our fee. Sure. So we charge.
Every platform does that. Yeah, every platform.
Yes. So what we do, we charge $3,500 upfront, but then we credit that against your success fee. In general, 7%.
Sure. Okay. So that means success fee means you raise 100,000, 7,000 goes to TruCrowd as the percent success fee. Okay.
Less the 3,500 that we already got.
Oh, okay. So you might. Okay, got it.
Yeah, we give credit for that.
Okay, that's good. So now we're looking. If you're an entrepreneur, you're taking notes. We're looking at 5K so far, right? 1,500 for the accounting. Minus, if you don't add your incorporation, which that could cost you anywhere, let's just do the math easily. 2,000 incorporation, and I already got all the documents. 1,500 accounting, so that's 3,500, and then another 3,500. So about 7K if you're just starting out before you even get. Yes. Okay.
There are two more costs, more upfront costs associated. One, escrow. We have to open an escrow account. and that escrow will cost $500 upfront.
Sure.
The escrow are made with the F.
That's where the money goes, right? That's where all the money that's raised goes.
Yes, yes. The money stays into a bank. It is an FDIC insured bank, and the money stays there. And the last
before you move on, just in case I forget, does the money have to stay? So let's say I'm raising 100K to make the math easy. Does the money have to stay in till I make 100K?
No.
Okay.
No. What we do, we structure the deal saying minimum 10,000, maximum 100,000. Let's say that means after you reach the 10,000 in clear funds in the escrow, we can send those money to you, less the fees.
Got it.
Right? So
that makes
that's
sense.
Pretty good because you don't have to wait until you get the whole amount.
No, that makes sense. That's really good, though. If you think about it as an entrepreneur, right? A lot of times you have to use money because you have cash flow, and sometimes you're not making money yet, so you need to raise this money. So if you have to wait till the end, that could still kind of put you out of business. So it's nice to be able to draw from it as you're raising it. That's a huge upside to doing this. Yeah.
Yes. Yes. And then the last fee, it is a background check. The SEC calls it bad actor check. That's their term. And basically, they don't want people that had financial or securities fraud in the last 10 years to be part of this.
So do background check on the founders or everyone in the
on the founders, anyone that has 20% more 20% or more equity in the company, and anyone that can change the direction of the company. So if you have a CFO with zero equity, like a board member with zero, but because they are in the position to change the direction of the company, we have to do the bad actor check. And that is $45 for each person.
Per person. Okay.
Per person, and one for the company.
On average, it's very, very difficult to raise money as an individual. So let's say on average, you have at least 3 co-founders, 3 board members, 6 times 50, so another 300. So right now we're at 8,500, let's just say so far, right? And is there any other fee?
That's it.
Okay, so
for compliance perspective.
Okay.
Right? For compliance, that's it. Of course, they have to have marketing, or they have to have a existing, ideally, if you have some a way to reach out to an existing crowd.
So this is
whatever that is
very important. If you're thinking about doing this, you need to be growing an email list. That's what he's saying. Essentially, you need an easy way through social media, but really an email list is the best way to grow an equity crowdfund, because if you're trying to raise from 100,000 people, 10,000 people, that means you have to have a lot more, because percentages, there's no way 100% of the people you have on your email list are going to invest. So you want to have
it would be nice.
Yeah, it would be nice. But never in the world does it happen.
Exactly. It will not happen.
So okay. So if you had to say you have to earmark a certain amount of money for marketing, average, what would you say that is?
It depends. Okay. I know that's a weird answer. It depends.
I know the answer. I'm going to tell you what I think, but I want to hear your answer.
I mean, why? Because there is a trade-off. You have the power to make the security that you are selling, the deal, really rich. Mm-hmm. The rich you make the deal, the less money you spend on marketing, right? The more traction you have, the less money you spend on marketing.
So if you already have some early traction, you're saying that will help you have to spend less on marketing, basically.
Yes.
Yeah. Okay.
Because every investment, people, so for example, if you have zero traction, you have to send 100 people and maybe it will be 2 buyers.
Sure.
If you have a lot more traction, bigger team, revenue, everything, whatever you have, for the same 100 people, maybe 30 will invest. So there you go. For the same, you have more takers.
That makes sense. That makes a lot of sense. So, I mean, this is good because I know people are going to look at it and say, oh, I can do that. But they have to understand all the work and the fees it takes to do it, right? That is probably most of the work, the marketing, right? Once you have that, you have to grow an audience. So you want to start growing that audience as early as possible. So part of it, you know, we work with MetaBronx.
That's correct.
Part of what we're trying to do at MetaBronx is have startups understand earlier. You have to start building your community, even without a product in some cases, right? Get beta.
100% correct.
Right? So talk to me about from the CEO level, what things do you think an entrepreneur should do to make sure their equity crowdfund platform has the best chance of success?
They should have traction. If that is not possible, at least they should have a good team and a good idea. Yes. So I would say not the easiest, because it's not easy to bring a good team. That's hard. And that's why investors on all levels appreciate that.
Team,
because
team. So I've been studying venture capital. Team is the #1 thing they look at, because they believe the idea is going to change. Any idea changes, but that team has to be able to maneuver those rocky waters. And if they don't believe that that team can do that, they're not going to give you any money. So if it's one person, it's close to impossible to raise money. So if you're a solopreneur, you need to be working on finding a partner. You have to, if you want to make money. So, okay, you want to have a good team, whatever.
It's hard.
It's hard.
It's hard to do that. But again, it is a good measurement, because if let's say I have an idea and I cannot sell my idea to people that are to join me, probably idea is not good.
Exactly.
Or
that's right.
Probably my pitch is not refined enough. I have to refine it and try it until I find those people interested to say, you know what? Yeah, I like it. Let me join.
So that's a huge point there, because if you can't sell a person on working with you, how are you going to sell somebody to give you money?
And then sell the product. And because at this stage, the CEO role, I mean, they have like all roles, salesperson,
everything, but mostly a salesperson,
exactly. So you have to start to make your improve yourself by bringing the team. That's good. If you do that, check. Okay. Then have a team, have the idea there, and again, having a minimal viable product sometimes might be good enough.
So when you say that, though, because I had a discussion last week with somebody actually from your team, and can you say what a minimum viable product that could work on equity crowdfunding? Because does that mean you have to have an app in an app store or something that's live working with customers? Or can you have a wireframe, storyboard, whatever user experience document, or should it be something live and tested?
From compliance perspective, it doesn't matter. A business plan on a PDF file or few slides is good enough from compliance perspective.
Sure.
The issue is when you have to convince people to buy.
To give you money.
Exactly, to give you money. Because what happened, they want to see, can you do it, right? And the more traction you have shows, you know what, they can execute something. Of course, less traction, lower valuation. They go hand in hand. And sometimes investors go with a lower traction because they get a better deal. So as you said before,
because the audience may not know a lot of the terms you're saying, right? So when he says valuation, he means what the company is worth, right? So if you look right now and you say, I have an idea just in my brain, of course the value of the company is going to be smaller than if you have an app in the App Store, right? So
yes,
the investor knows that, and if they really believe you can do it, they'll get in there and get a much bigger percentage of your idea. Versus, that's why it benefits you as an entrepreneur to spend your own money, whatever you have to do to get that product to a point that you can prove you're going to be able to do it, because you're going to get a better deal from investors and you're going to keep more of your company. So yes. The more further along you are, the better. But like he said, the SEC doesn't care. So if you're going to spend that $8,500, or let's say, make the math easy, $10K on just getting on the platform. And then from my experience talking to many equity crowdfunding companies, you're going to need at least $15K, I think, 10 to $15K of advertising to really start growing a decent enough community that may invest. And that could be low. So let's say $25K. So if you're going to invest $25K to get on equity crowdfunding, you want to have a good shot at success. But one question I do have is, what if you do it, but it doesn't work well? How long do you have to maybe continue to work on your project? Do you only have one calendar year under that one filing?
No, I mean, the regulation is not clear. You can, for example, you might say, I want to close in 4 months from now. Mm-hmm. And then a week before that, you extend for another 4 months. And then you extend for another 4 months.
But so can you go past a year though, or no?
Yes. Yeah.
Okay.
Yeah.
Okay.
I mean, there is no restriction on that.
So just so I understand, anybody watching, if you spend, let's say you spend that $25K, you have an endless amount of time to raise that million or whatever your goal is?
From compliance perspective, yes. But let's say if you put the deal 3 years ago and you are still working on it, something probably,
like from a sales perspective, the investors are going to look at it a little weird. Yeah. Okay. That makes sense.
Yeah. From that perspective, but from compliance, it's okay.
So you can keep it going. You want to make sure that there's a way to make it look like the deal is sweetening at least, right? Because it's going that long. Okay. So, all right. So that's pretty good. If there are any questions in the crowd, I know people have to have questions. Definitely put them in the chat, or if you want to jump on, I can give you the link. I got some questions myself until people ask. But okay, so I asked you what entrepreneurs should know. I asked you how much does it cost to be listed. Okay, why don't you talk about TruCrowd? What makes TruCrowd different other than speed? Like you said, speed to getting to platform, that's where you started out, making sure you were ahead of that side of the scenario. What makes TruCrowd different other than that?
Well, simplicity too. We had an issuer. They talked to another platform, and when they come to us, they said, "Oh my God, Vincent, it was so complicated. The process was so long. They asked so many things, and again, and come back, and not clear." So I think those two items are most important that differentiate us: speed and simplicity. And it's more than that, because we help the issuer.
You work with them.
Exactly. We help them with everything they need, all the guidance they need. And we say that it is 100% guaranteed that if you want to, of course, if there is no regulation issues like bad actor check, the issuer will go live on the platform. Okay. Sure. So that is guaranteed. That's not the biggest problem. The biggest problem is the marketing. So that is the thing.
Yeah, to make sure you're going to get growing traffic to the project.
Exactly, to bring enough people.
That is the difference I've seen of other platforms, right? Other platforms have a low acceptance rate, right? They don't accept every company. But in TruCrowd, if you're willing to put the money up, you can get on the platform.
Almost. I mean, we talk to the issuer, okay, and we tell them that we send people back. You're not ready, like you said, one person. Sure. And let's say they've been an MD and they wanted to do something in the business world. Even if they had a very good idea from the medical perspective, I told them, you will just waste money. You will just waste money.
Sure.
Bring a co-founder. Bring an IT. So this is real. They had some.
You advise them to make sure they're not just doing something that's not in their interest.
At least, exactly. So at least we want to believe they have a fighting chance to get funded, because otherwise it's waste of everybody time, money, and I would say happiness, right? Because if we bring an issuer and they ask us, do you think we have a chance? I say, my opinion, yes or no. So then we tell, okay, go back, try and do this. So this was real. A doctor, he had an idea for an app, okay? He said, and he will code, who will do the app for you. I will find someone. Okay, find it first or find her first, right? And then come back because it would look better. I mean, nobody will invest into an MD that, I mean, if they had something medical, yes, but he wants to do an app for the medical profession. Like, well, you're not ready. Sure. And like we explain, we will take your money if you want to, but it's waste of your time and our time, because we make money when the company is successful, not for the upside, for upfront. That is just to cover some of our costs.
Yeah. No, it makes a lot of sense. So we have a question from one of our MetaBronx students. I'm going to bring him on.
Hi.
Hey, Kevin.
Nice to meet you. My name is Kevin. And Kevin. So my question is, so I've heard of crowdfunding before, but I've also heard equity.
1 second. Can you repeat? My Siri started.
Okay, sorry. So I've heard the term equity used in a lot of different financial contexts. So my question is, what is the difference between normal crowdfunding and equity crowdfunding, if there is a difference?
Okay, it is a difference, a big one. I
assume,
yes, good question. Yes, when you say normal, it is like Kickstarter, Indiegogo, right? I think, and that means perk, discount, heavy discount. So with that, the person that gives you money, they get a promise that they will buy your product. In fact, they pay you for the product right now, and then, but they will pay at a big discount. Okay, they'll buy it. They pay right now at a big discount, and sometimes in the future you give them the product. Okay, first you have to have a product or something. With equity crowdfunding, any type of business is okay. Okay, and then there are some. Again, here in Chicago, we had a friend of mine. He raised lots of money on Kickstarter for a product, for some device. And what he did, basically wrong expectations. He talked to the company in China to create the device for him, and was like $80 the production cost. So he said, you know what? I can give it in crowdfunding for like 120 something. Okay, normal price 300. So big discount. All went good. He raised like about 700,000. And then the company in China said, oops, we are wrong. We cannot do it for 80,000. We have to charge you 120 for each. So so basically he had to raise more money just to be able to cover the production and give the. So it's not, I mean,
but
it is.
Just so basically what you're saying is you get the product or some kind of perk, a t-shirt, something in crowdfunding. Equity crowdfunding, explain what that means.
So in equity crowdfunding, you get a security, a financial instrument, a potential financial return. So it's, for example, shares of common stock. Okay. And as the investor, they can be really good. I mean, people that invested first in Airbnb, and I think the Airbnb, if I remember, the first raise was like 127,000 something. So people that gave those money, now they are really, really, really rich.
Yep. So, and I have a video explaining that more in depth. It's in the description if you want to watch it. But does that mean you have to, so in traditional stock, right, you can get dividends or you get on the exit, right? So in equity crowdfunding, do you get only on the exit or do you get dividends as well?
It is the same. So for example, when you go and buy shares of common stock in Apple, they come with whatever rights have. You can sell the same shares of common stock in your company. And it comes with the same rights, whatever rights they are, dividend. So the security, what you sell, the shares of common stock, you set them up when you start the race. The simplest one is shares of common stock. Share of common stock entitles the shareholder to dividend, to appreciation, like any other shares of common stock.
Yep.
So yes.
So if you, just so I can quickly explain this, let's say I'm raising money today and I tell you my stock is 50 cents a share. You can buy it for 50 cents a share now through equity crowdfunding versus before you would have had to wait till I got public and now my shares are worth $5 and then you can buy it. But now you can be on that upside at the 50 cent level where before only accredited investors were available at that level. And that's why the rich pretty much get richer because they're the only ones that could be involved in these big deals. And the money just is transferred in between them, you know? So now this is like bringing us all into that world, but you still have to be sophisticated in a way. There's many ways to do research because one of the cons to this is people worry that there's not going to be as many of those that survive. So there can be some way of, you know, fraud, right? Oh, I'm going to raise $1 million to do something that I never really intend to do. What kind of things are in place to prevent that?
So the SEC requires background check, make sure the company is for real, and that is on our end that we do. Then it is the crowd that they call that crowd intelligence, right? So everybody is looking, they found something, and yes, it is riskier. So if you invest, in your example, if you buy right now with 50 cents or what you buy at the IPO level with $5 or $50, right? The difference is that now it is a lot riskier.
Yeah, the higher you invest, the riskier it is, right? So you have to understand that in general, if the people that are investing in Tesla day one, they were taking the biggest risk, so they get the biggest reward. The further you get down the line, the less risk you're taking, so the less reward you get.
Exactly.
That's the name of the game. So it makes sense. So that brings me to another question, though. What is the minimum? Can I invest 50 cents in a startup, or do I have to invest?
No. So usually what we do, it is basically the startup call, what will be the minimum. We advise going below $100 is too complicated.
Sure.
So they accept $100 per investor. Usually what we saw, $250, $300 per investment, per deal.
So you buy whatever amount of shares equal $300. So if it's 50 cents, you're buying that many shares, right?
Yes, 600 share if they invest $300. Yes.
So, so that's a per deal basis, though. The startup.
Exactly. Yeah.
So you get to choose as an entrepreneur.
Exactly. You choose as the startup. You can choose what the minimum that you accept, but that is reflect from the investor perspective, because the higher the amount, less people even interested, they will not invest. So if you put your minimum $5,000 will be people that will say, you know what, I would put 500, but 5,000 I pass.
Yep.
Yes.
But there should be minimum, because what you're saying is the paperwork per investor makes not enough sense to do it under a certain amount of per person. Right?
Yes.
So
Yes.
50 cents, the paperwork costs you more than
the transaction to move the money from the investor bank account to the escrow. Then the bank is doing a anti-money laundering for each investor.
Oh,
and
so okay. So the bank does a due diligence on the investors on their side?
Yep. And that will cost the company will cost $2 for each verification. Of course, they take. Yeah.
So it's $2 per investment. They take it before. So if I invest 100, I'm really investing 98.
No, you invest 100, so you'll get 200 shares in your 50 cents example, and the company will pay those $2 to the bank.
Okay, so the company.
Yes. So you, as the investor, you get the full price, the full benefit, the shares that. But
so what would
the company.
I'm sorry, go ahead, finish.
No, the company will cover those transaction costs, basically.
They cover the fees. What would you say is the total percent? Because you have your success fee. There's these fees for the bank. What would you say is your final percent that you can expect to have to pay on the full raise? So if I raise 100,000 with all the fees and everything, how much percent do I have to pay out and I stay with on average?
Okay. So I would say probably 8.5, something like that. And there are many factors, right? Because, for example, there is a transaction fee. I'm
going to add that. So those 2%, I'd say that is part of it.
Yes. Well, if the investors they give you take they pay you via ACH is $1. If they pay you via wire transfer is $15.
Whoa! And you can't force a certain type of payment. You have to allow all.
We kind of do. We put some limits. So, for example, if you want to send wire, you have to invest at least $1,000.
That makes sense.
So even if the limit is 100, that is good only for ACH.
So
if you
that makes sense. Makes sense because it's a waste.
Yeah,
this is like $50, right? $40 at least. So that brings me to another question: can people from outside of America invest in an American?
Yes. Again, that will get even more expensive, but they can invest.
Does that get more expensive on the entrepreneur or on the
entrepreneur? Yes.
Okay.
So the entrepreneur
has to pay. Got it. Now that makes sense.
Yes.
So do you?
But again,
go ahead.
I'm sorry.
No, go ahead. I have a question, but I'll wait.
So the most the expensive one is again the anti-money laundering. If the investor it is from Canada, Australia, or some Western European countries, it is $5. For everyone else, it's $65.
Whoa!
So, because they still have to do the bad actors, the anti-money laundering, but they have to go to globally. So, and again, it's worth it if the minimum it is, so
you basically
a lot higher.
You set a minimum past the amount based on so if you're external, you set the limit much higher, basically. If you're outside of America, got it.
Exactly, for international people.
Makes sense. It makes sense. Yeah, I mean, but that's good though. That means you can raise an idea, you can raise money around the world for an idea that's pretty game changing, right? Like venture capital is, I mean, you could do that too, but they take a lot more of the company. Another benefit I saw in equity crowdfunding is you get to kind of set your own valuation, right? How does the valuation thing work Because that's
almost.
Huh?
Almost. I mean, you cannot set it right, whatever. I'm sorry. You just pick a number. No, that will not work. But what we do, we will help you with that.
Sure.
We have a valuation tool, and it's not extra fees. We run that valuation, and then we talk to you, right? And that valuation is based on the forecasted financials.
Got it.
And then we want to make sure it's reasonable, because so it's not lots of fighting on that. But if you are a startup, you have just a business plan, and you say this is a $20 million valuation. We say, come on, who will believe you? Nobody. So right.
So if you're ever thinking about investing in stuff like this, that's the first place I tend to look. How much is the share price and the valuation? Because if that is super unrealistic, then I feel like the team doesn't.
You don't trust them.
Yeah, they don't know what they're doing. So you got to really become a little educated on these type of companies. What is a good valuation? So there's some work you have to do to become a sophisticated investor, you know?
In fact, what we do, we will create a valuation report for each company. And it's like 17 pages report. We create that. So
you create your own version of it, of what you believe it is, and then they get to say, okay.
It is a software. It is a big data, lots of information from everywhere. We put the data there, we run the valuation. And those 17 pages, they spell out all the assumptions. So then it is helpful first for the entrepreneur to say, okay, I look like this. And then for the investor to say, okay, based on these assumptions, I believe it. Because the assumptions are credible, the output, garbage in, garbage out.
100%.
The output, it is, but if the assumptions, like, okay, in the first year with this business, I'll make $100 million revenue. Yes, nobody will believe that, right? From 0 to 100 million. So they look at the assumptions and say, no, I'm out, right?
That's one of the major differences I see in venture capital, though, because in venture capital, they kind of want you to think that, and because they want you to feel like you're gonna skyrocket. So that's one of the things I see when I think of equity crowdfunding versus venture capital.
The VC game is kind of cruel. So they let you dream, basically. So then you make big forecasted, and then they hold you accountable.
Yes.
And then you never meet them. And boom.
Take your company.
They got you.
Exactly. So that is a big difference. That's part of why I actually think equity crowdfunding is going to change the VC game. Because
eventually,
they're going to have to adapt to this innovation. And if they don't, most people will go this route because it's less, stressing on a company. So it's super interesting time.
And you have, in general, as a rule, on equity crowdfunding, let's say everything equal, you can sell at a higher valuation than VCs, kind of by default. Why? Because with a VC, you sell wholesale. It's one person buys everything. With crowdfunding, it's retail. That means always if I buy retail, I pay more. So it's the same thing as an investor, because I'm buying retail, I'm not buying everything, wholesale, I have to pay more. So that translates.
That's a good way of explaining it. That's really good.
Yes. So that translates that you, the issuer, get a higher valuation, basically.
So as a business, you can set a higher valuation because what he's saying is venture capitalists, especially right now, venture capitalists can set whatever terms they want because of Corona, the pandemic. They can say, look, you're not going to stay alive for 2 years. So you either take this deal or don't. And I've heard of companies having to take down rounds, meaning they have to make their valuation lower, even though they have traction, just because of the scenario we're in with this pandemic. So as opposed to with equity crowdfunding, you can do a lot more, basically. So what on the last point, we got like 5 more minutes. What would you say is like things to make sure you look out for as an entrepreneur before you even try to do equity crowdfunding? I know we spoke about team. We spoke about making sure you have the money, making sure you have an idea. Is there anything else that you see where it will make you much more successful in a equity crowdfund?
I think at least some securities related education. Okay. Because after you raise money, you have to deal with investors. Okay. And I tell each company ask me, should it's something extra special for them? And say, yes, you should treat them as well as you treat your employees, your customers, and investors. And
when you say treat them, you mean like keep in touch with them through email, let them know what's going on?
Keep them informed. Even if bad news, keep them informed.
Sure.
Right? Don't hide. Don't hide, because
that's true about venture capital as well, right? Like
exactly,
you have to spend a lot of time updating your investors so they feel good, because eventually you may need to come back to them, and you don't want people to feel like I gave this person money and they disappeared on me, right? So
exactly.
That makes a lot of sense. That makes a lot of sense.
Plus, unlike VC and angel investors, imagine you have 2,000 investors and you keep in touch with them. That's such a good marketing machine that you can build around that. Because say, hey, I'm going that. Go share my link.
Exactly.
Right?
Do it because it helps them, right?
And exactly. So they are vested to help you.
Yep. And when you want to raise the next year, you have that list. So I am working with TruCrowd and other investors. So if you are a startup looking to become ready for equity crowdfunding, go to startupinvestorconnect.com and fill out that form to see if you're ready, and we can help you get to that level. But any last things, definitely visit TruCrowd.com. Any last ways? I have your LinkedIn in the description. Is there any other things for people to reach out to you, or any last words?
Well, I think in general, what we saw, we have better candidates, companies that go through an incubator accelerator. We saw lots of value to that. So when companies just call us directly and they said, yeah, let's do it, it's okay. But usually when they work with someone like you, with your group, they get more prepared. And that's valuable. That's valuable because, again, it's that information that they know, lots of other things that you help them with.
Yeah, so what he's referencing is companies have holes in them, whether they see it or not. And if you are inside of it, you won't see the holes that investors do see.
You are too close. Yes.
Yeah, you're too close. So what we do is we show you from the other side what those holes are and help you fill them. So then you go on to equity crowdfunding and you don't lose, So that makes a lot of sense. All right. So thank you for your time. This has been amazing. And
thank you very much.
Check out TruCrowd. Look at the deals. Also, really quickly, I know you have other websites, like you have a cannabis-focused website. What was the name of the cannabis one?
That's Fundana. Fundanna. Fundana.com.
And it's the same you can invest in cannabis companies, the same exact
cannabis, hemp, CBD.
Okay.
In that area. We have musicfi.us of starting. That's music related deals.
Sure.
And we have Crypto Launch. We started that when crypto was kind of hot. Now kind of lost a little bit of the shiny thing, but eventually it's there. So probably will, soon we try to do something with that to bring more deals on that. But for now, Fundana and TruCrowd, those are the portals that we have.
So if you think about it, right, everybody talks about how the cannabis industry is going to kind of not benefit the community that it really ripped apart, right? When you look at a website like Fundana, now you could be involved in the upside of the cannabis industry as early as possible by going on a website like that, putting up a couple of dollars, and now you are an investor in these cannabis companies. And if they grow and do well, you do well. So that's where, again, we really shift the communities of color that we've been out of this game. Now we have the opportunity to be in it. And I highly suggest you go check it out, do your research, because this is a game changer, trust me. So thank you for your time, Vincent.
Thank you more.
Touch. And everybody, thank you for watching. Please like this video, share it for anyone you know who has a startup at all, because I'm sure they're going to want to know this information. Thank you, Vincent. Have a good one.
Thank you, everyone. Thank you, Miguel. Bye-bye.